Hello everyone. Hope everyone has having a good weekend. So in this session, for first 30 minutes, I'll explain about our indicators, how to use them. Right? There are mainly 6 or 7 top indicators we use for our day-to-day trading. Whether in evening hours we can use 1 minute, 2 minute, 3 minutes, whereas in the morning times we generally use 5 minutes for our trading. So there are mainly 6 or 7 indicators. I'll explain them. And then, yeah, if anyone has any questions, right, as most of you know, there are two ways you can trade. One is you can use your personal accounts where you can hold the trades. You can trade in a higher time frame, like 15 minutes, 1 hour, where you have much more success, where you don't need to watch the charts. If you take in 1 hour, you can hold the trade for next 2 days, 3 days, 4 days, like that, right? Whereas in for prop firms, where you don't need to invest your own money and where you can scale up as much as you want, we have to go with the smaller time frames like 3 minutes or 5 minutes because you have to close the trades by end of the day. So it is up to you whether you want to trade stocks, options, futures, cryptos, currencies, commodities, whatever you want. The logic is same for each of the indicators. You can trade whatever you want. If you use trading view, then you can trade whatever you want. If you use ninja trader, then you have to follow certain, right, it is mainly for futures trading. So in next 30-40 minutes, I'll explain generally, right, how to use our trading view indicators. And then if anyone has any questions, I'll take those questions, right? So first thing is there are mainly you have primary indicators and secondary indicators. What do you mean by primary indicators? The indicators which will give you the actual buy signal, sell signal, right? So we have different primary indicators like top trend, price pulse, we have T3 indicator. Now we also have T33 indicator. Those are our primary indicators, which tells you when to buy, when to sell. Then there are secondary indicators, which are like, which gives you a confluence or which tells you it will support, right? Those are like support indicators. So if top trend is telling a buy, then your T5, T55 will tell you, is it a really a good buy or not? Or if your price pulse is giving a sell, then your T5, T55 will tell you whether it is a good sell or not. That means those are the supporting. They will not directly give a buy or sell signal, but by looking at those indicators, we can understand whether it is a really a good buy or should I wait. Those things, right? Is it clear for everyone? Primary indicators are which directly tells you when to buy, when to sell, but you don't want to directly depend on one indicator because right trading is a dynamic one. Market is so dynamic, so you should not just depend on one indicator, one software to do your buying or selling. Always we need to depend on minimum 3 softwares to take a decision. If 3 softwares are telling the same thing, then it is a good opportunity. If 3 softwares are telling you sell, if you have more than three, 4 are telling, that means it is much more confidence. If you have five, and if 5 of them are telling the same thing, you have much more confidence. Your success will be much more. So we always look for minimum 3, maximum 5, right? If it is more than 5 also, it can become too much cumbersome, too much, right? Too much disturbance on the chart. So your minimum should be 3 indicators on the chart. Your maximum should be 5 indicators on each chart. You can have different tabs. You can have different types of indicators on other tabs, but on one chart, one tab, maximum minimum 3, maximum 5. So yeah, I enable the chat. If everyone is clear with what are primary indicators, what are secondary indicators. Primary indicators are which will give the actual buy sell signals. Secondary indicators are which will support the primary indicator, and then they will give their opinion, they will give their suggestion whether to go with the signal or not. So we'll start with our first indicator, which is our top trend indicator. So top trend is one of our number one indicators. So there are many superstars who shared their success story. This is one of our first indicator which we initially released last year. There are many superstars, including Venkat, who made from 6K to 60K in 1 month. Then we have Prasad, who is making 12 to 15 payouts every month using prop firms. So all of them use top trend indicator. Right? This is one of the number one indicators. So this particular indicator, right? Let me hide the supporting indicators for a few minutes. So if you see this, right, for example, you get a buy signal and your background is green. That means generally it is a good opportunity. Or you get a sell signal, your background is red. That means that is a good sell opportunity. So if your background is like what is the overall trend in the market? If your trend is overall bullish and you also get a buy signal, that is a very perfect offer. Or if you get a sell when the background is green, you should avoid that. That means because your trend is bullish, but you are getting a sell. And if in the next candle if it becomes red, that is okay. But if in next candle also it is bullish, then you don't even right. You will just ignore the sell signal. In the same way here, if you get a buy signal when the background is red, you can ignore that. So if this is giving a buy, right, your top trend is giving buy, and at the same time your T55, right, your supporting indicator is showing a blue candle or blue bar. That means this is telling it is buy. Here blue means it is buy. And then if you are this one is also showing a green color, right? If you have blue or green, that represents bullishness. If you have red or orange, that represents bearishness. So here you have a buy, here you have a buy, here you have a buy, that is a perfect opportunity. Or here you got a sell signal. Here you have a sell signal, right? You have a orange. Here you have orange. That is a perfect short opportunity. So like that, generally if you are right, we have something called as a score here, right? S represents score. If your score is around 70, right, minus 70, right? Generally this chart, if you see this chart is made up of 100 to minus 100. Minus 100 means it is very, very oversold. That means too much of selling happen. It can bounce back at any point of time. Or if it is 100 means it is nearly overbought, right? No more, it is not possible for any more buying to happen. It will start dropping, right? Because big companies will always try to buy at the bottom, sell at the top. So if you see, whenever you get a buy signal, if you see your score anything close to minus 70 or lower, that is a good opportunity. Or whenever you get a sell signal, if you see a score of 70 or above, that means it is a perfect short opportunity, right? 70 or above is short opportunity. Minus 70 or close to minus 70 or below is a good buy opportunity because this is like oversold opportunity. This is like overbought opportunity. So whenever you see top trend, a background color is red, you get a sell signal. You also got a score of nearly plus 78. You also have a orange candle. That is a perfect opportunity for a short. So like this, if you see something, right, for example, it came all the way to the bottom and you see a sell signal, then you should not take the sell, right? Because now it is at a oversold area. You don't want to sell at a bottom, right? Just there is one right a stop loss hunting candle where big market makers will try to scare the retail traders and then it went all the way up, right? I hope everybody is understanding it and you can see it, right? Is it clear for everyone? Are you getting it? Right? So again, one more time explaining, it is minus 100 means it is oversold, plus 100 means overbought. So i- if it is all the way at the bottom close to minus 70 to minus 100, that is a perfect opportunity for you to go long. When it is positive, that means it so many people bought it, right? Think like so many people, right? If it is saying 78, out of 100 people, nearly 78 people, 80 people, 100 people bought it. It cannot go above that. That means now people will start booking the profit. You think like you have 100 apartments, 100, right, 100 units. So nearly everybody bought that stock. Now people want to book the because it moved so much high. People want to start booking the profits, right? They made some nice profits, right? Some people bought here, some people bought here, some people bought here. Now it is at a peak value. It cannot go further high. So now people will start booking the profits. Big companies will start booking the profits. So whenever this value is close to 70 or above, that is a good opportunity to sell. Whenever it is at a bottom, that means so many people sold it. It cannot go further down. Now again people, because now price came all the way down, now people will start buying it again, right? So if you can correlate to that, right? To that simple example, if so many people sold it, out of 100 people, 89 people sold it. That means if now people started buying, you got a buy signal, suddenly the trend got changed to bullish, then it will go all the way up. You can buy calls here, you can do bull puts here, you can go long and you can hold, you can make nice profits. So our top trend is our number one indicator. By looking at the color, by looking at the signal, by looking at the score, by looking at this T55, then you can easily take a decision, is it a good opportunity or not. If you get some, right, it came all the way down here, you got a sell. That sell is not a good opportunity because already 77 people sold it. It may go little bit down, but it may not go so much down. So you better, even though it is a red color, you got a sell signal, you just ignore it. You may not make much profits. But if your sell is somewhere here at the top, you get a sell signal. That will be a nice opportunity. So always try to buy close to the bottom, sell close to the top. Buy when the score is below minus 7200, sell when it is above 7200. When it is something in between, it is okay to miss those opportunities. There might be some good opportunities in middle, but it can go up or it can come down. But when it is at bottom, it will only go up. When it is at the top, it will only go down. Right? If you can just follow that simple rule, you will be successful each and every day. You can make right nice profits with prop firms or with your individual accounts. So top trend is our one of the top indicators by looking at the color, by also looking at the clouds, right? If your clouds are red, that means it is bearish. If your clouds are looking green, that means it is bullish. So you have so many visual indicators, visual things telling you, okay, what is the background color? What is the cloud color? What is this color? This color, based on if you can visualize and understand that, okay, now I see that this is green, this is blue, this is green. I got a buy signal, and the price is going above these two clouds, then that's a perfect opportunity. So that is your number one for. So if it is right, if it is minus 94, minus 95, that is much more better opportunity. If it is closer to minus 100, that is a perfect offer. You can confidently buy and hold your trade, even though it may go little bit $100, $200 down. It will make $1,000, $2,000 if you give some time. So if it is close to minus 80, minus 90, minus 95, your confidence will be more and more. If it is as close as to minus 100, your success will be much more higher. That means it is becoming more and more oversold. Then there will be high, right? Once it becomes oversold, it will start moving up. So first thing is you need to wait for a buy signal, right? You will not see this and do buy. Whenever you get a buy signal, you will see this, you will see this. Okay, you see that, oh, score is minus 88. That means, oh, very good opportunity. Or I got a sell, score is above 80, very good opportunity. Like that, always we look at, right? For example, on Friday, we took AVGO trade, right? Friday morning, you know that we entered AVGO in the live session. So let us see, right, around what time we took the trade. Yeah, around this per 5 minutes AVGO. March 7th. So for example, right, you can see that we got a buy signal here, right? You see a buy signal, the background is green. And what do you see here? You see a blue candle. You see score of minus 92, then it started slowly moving up. That means it became oversold, right? It reported very good earnings. Then, but because of the sell-off with overall ESNQ, it dropped so much. And then score became merely minus 92. And then we got a buy signal. When we got a buy signal, we went ahead and we took the AVGO calls, 185 call. From 185, it moved all the way to, right? Even though we booked the profits little bit early, right? When it moved at 50, 60% up, we booked the profits. We got the bull put spreads. And then when it went all the way to the top, we got the bear calls, right? We did 197.5 and 200 or something. So we made profits on calls, we made profits on bull puts, we made profits on bear calls, all different ways. But do you see the logic? We got a buy, color is green. Here this is blue. Here the score is nearly minus 92, and now it started moving up. So that's it. All you need is you got a perfect confluence, right? Your main indicator gave a buy signal. It touched the support. Then it started moving up. This became blue. This became green. That's a perfect opportunity. So if anybody want to see, right, let me show you, right? Yeah, you can see it because there are always people who doubt for everything. So, right, this is Friday. Right. So if you see AVGO 185 call, right, around 10:20 a.m. If you see here, right, we got a buy signal around 10:20 a.m. There is a perfect confluence, right? This one is bullish. This one became bullish. It came all the way to the oversold area. Then we got a buy and it moved so much, right? If we'd have stayed, that would have become a nearly $500, 500%, 600% profit, right? We took profits quickly because again because Friday is generally very volatile. You can see that, right? We took nearly two or two contracts, nearly $10,000 within 10 minutes, and then you can, right? We took AVGO 185 call with 100 contracts. It is nearly $6,000. So again, we entered AVGO 185 call at 2.9. Right? Again, it made 4,000, 5,000. So now let's look at another example, gap. Right? We also took a gap. We also took, yeah, initially we took arm puts and then we took UNJ calls, gap calls, right? Let's go to gap. So here you got a buy signal for gap. The score is minus 82. That means it came all the way down. Then for little bit it got consolidated, but then from $21 it moved all the way to $23.2. Right? You can see UNG. It came all the way down nearly to minus 25 or Yeah, again, it also went so much high, UNG calls. Then what else we took on Friday? Yeah, we missed ARM. Actually, ARM should have, right. We made with the puts initially. When we started the day, we took ARM puts. But if we'd have bought this buy right around 11:25, we got a buy signal. Right, this did not come all the way down. It went to nearly minus 56. But ARM went from $116. Again, you got a buy here. You got this one. You got a buy here. Then it went all the way from $118 to 125, $128. So all we need is a proper confluence between the three indicators. So that is about top trend indicator, which is number one of the top indicators, where you need a right. You wait for a buy signal. Whenever you get a buy signal, you look for confluence here and here. And here, if the score is below minus 70, that is a perfect opportunity, or around minus 70, and this is blue, this is good, then that is a, again, you got a sell signal. Here it is 92. Here you got a red one. Then you can do the puts. So whenever you have a sell, your background, this one will give you a perfect puts opportunity. So again, same thing, right? Whether you can use, let us go and check some future stickers, right? Let's go to NQ. Right, on prop firms, because generally most of the prop firms, so you can only do futures. So here score became minus 90. We got a buy signal. We got a buy signal. It went all the way up. Now again it went to 86.25. Now we did a bear call spread. We made some nice profits at the end of the day with the bear call spreads. We did the bull put spreads here. We made some nice profits with the bull put spreads. Right? We completed the challenge, that beast challenge. Within 5-10 minutes, we made $1,500, $2,000 with the ETF accounts, and hundreds of members completed the beast challenge. So your background is green. You got a buy signal. It is at a support. This is bullish. This is bullish. Your score is below minus 70. Then a perfect opportunity. When it goes all the way to the top, and if you get a sell signal, that's a good short opportunity again, right? But if the market is at the end of the day or low volume time, then but especially if 9 to 11, so right, in non hours, non US hours, then you use 1 minute or 2 minutes. In US market, use 5 minutes. So if you can wait for such opportunities, then your success will be very, very high. So one is buy, green background, blue, and then your score below minus 70 for the long opportunities. And then whenever you get a sell signal, it should be above 70, it should be orange color, and then you get a sell, then you do bear call spreads, right? You go a little bit high and do NQ, NDX bear call spreads, SPX bear call spreads, then you will make nice profits. So if you see, right, again on the day, if you see, we did at the end of the day, we made profits. We went up much bigger, and then we did bear calls. We went little bit down. We did bull puts. We made profits with both of them. So that's how, if you follow a proper strategy, we can make nice profits every day. So that is one of our top, right, primary. So these are our secondary indicators, right? These are supporting indicators. This is one of our primary indicator. So eh, now let me remove this, and then let me go to price pulse, right, which is our number two indicator. So you don't need to have top trend price pulse together. Either you use top trend or you use price pulse. These are common, right? These are supporting, which will help you every time. But now if you see, right, whenever the price, this line becomes blue, that means it is bullish. Your price pulse gave a buy here. PP buy means price pulse is telling that, okay, now you are good to go long. Right, whenever it gives a buy, you go and see here, okay, this is blue, that means it is bullish. Now you go and see here, what is the score below that? Oh, minus 90. That means from minus 90 it is becoming positive. It was negative, too much of selling. Now to again buying started. You can see nice gap between these two, and you can see there is a right just before it was minus 90. Now it may be minus 80, minus 70, minus 60, minus 50, 100, 0, 10, 20, 30, 40, 50. It went to 86 from minus 90. So now you can see that, right, it went all the way up until this line is blue. The price is bullish. So if I go to ES, you can see the same thing, price pulse buy, or right, whichever signal you want. We go to NKD. You got a minus 75. You got a PP buy. This is blue. This is green. Blue. Completely bullish. So each trade would have made 2,000, 3,000, $5,000 with just one contract. Right? It went all the way up. Now again, right? Whenever you get a sell signal, so there is no sell it. Only so your trigger is you should get a buy or you should get a sell. Okay, now I got a PP buy. When you get a PP buy, you go and see, okay, this is telling it is bullish. This is minus 75 and then started moving up. Okay, that is good. So that's it, right? Or let us go to something like natural gas. Okay, here you got my 87. You got a PP sell, but it was the price was just touching this line, right? Never the candles were below the price pulse line. If they are completely below the price pulse line, we can enter a short. So even if you entered it, it would have taken a small loss. So we always look for such opportunities where your score is above minus 70. That's where you have much more higher success. So for example, here, right, you see that it is minus 91. You got a PP buy, right? Whenever you got a PP buy, you see that, oh, this is blue, this is minus 91, perfect opportunity, right? Anything below minus 70 is a good opportunity. So now it went all, so this one trade would have made 2,000, $3,000, right? We got some UNG calls and we made some nice profits with UNG calls, right? If natural gas is going up, your UNG will move up. So you can buy the stock, you can buy the options. It went all the way up. And then when this starts going up, when your T5 becomes red, you can take the profits. Until that time, you can hold the trade. So I hope the rule is clear for everyone. Yeah, T55 basically if it is at the bottom and starts moving up, right? It was at a downtrend. Then from the orange bar, slowly it turned to blue bars. And then slowly it went to the uptrend. Right? It went uptrend, uptrend. These bars are increasing. So from downtrend, it is going uptrend, which is a that means it is becoming bullish from bearish. This is becoming bullish. So all we need is right. This is like your downstairs. This is like upstairs. It was bearish all this time. Then suddenly from orange bar, sellers, buyers took the control and buyers started dominating. Buyers went all the way to the top. Then slowly sellers took some control. Again, buyers took the control. Now sellers took the control. So again, whenever until you get a sell signal, you don't need to. When you get a sell signal, you see that, oh, now sellers took the control. Here sellers are there, 74, which is above 70. So okay, that is a good short opportunity. Now you can short it, and again you would have made some three, 400, $500. Again, you got a PP buy, but it is only minus 26. So you can ignore the opportunity. So whenever it is score is below minus 70, that is a perfect opportunity. Whenever this is green, score is below minus 70, here this is blue, you got a price pulse buy, that is a perfect. So this is our second most important indicator after top trend, price pulse is, or price pulse, top trend are like our number one indicators, right? These are our two supporting indicators. So now let's go to the next one. So which is our or T3 indicator. So again, same thing, right? So whenever now you got a T3 buy, right? That means T3 indicator is telling, oh, it is good to go long. Now you go and see, okay, now T3 is telling that price will go up, but can I believe this signal? Now you go and see here, oh, this is also bullish. This is also bullish and score is below minus 70. Okay, now I can go long. You got a T3 sell here. You see red here, but your score is already too much oversold. So you should ignore this. You should not even think about shorting because it is already so much oversold. You don't want to sell it when already out of 100 people, 95 people already sold it. Then suddenly at any point of time, because big companies always want your retail traders to do selling so that they can buy at a low price, right? Retail traders will try to create some, big companies will try to create some news, do some enlisted, doing some downgrades, send some bad news about a Tesla, Nvidia. They will try to take the stock so much down so that all the retail traders will sell off their stocks. Then suddenly these big companies will start buying Tesla, Nvidia. They will take it all the way up. So that's where, so here already 92 people sold it. Now you should not, right? You see sell signal. If you do a sell here, suddenly it will start going up, right? You shorted it. You think like, oh, it is bearish here. It is also looking red here. You sell it, but your score is already minus 94, minus 95. That means at any point of time, suddenly buyers can chip in. Big companies can chip in. So that's where you got a buy, your score is below minus 70. This is blue, then a perfect opportunity. It went all the way up. So that is your T3. So with T3, right, sometimes you get multiple opportunities. So you got a buy, again you got a buy. So if you missed the initial buy, you can get the second buy like that. So, or you missed a sell, right? For example, let's go to ES. So let us say, right? In the evening hours, we need to go to smaller time frames. In the morning hours, always use the 5 minutes as the time frame. So for example, here, right, you got a T3 cell. Now the score is 78. This is red. It is above 70. So it's a perfect short opportunity. You can buy puts, you can do SPX bear calls, you can do you short ES. You will make huge profits because it is already overbought above 70. This is red. This is a sell signal. So if you miss this opportunity, maybe this might be another opportunity, right? Again, price came all the way down, did it up and again started dropping. So again, it can be a second opportunity. Again, it dropped further. It dropped further. So you can use more opportunities with the T3. Whereas we have, so the logic is same for any whether top trend, price pulse, T3. The logic is same. You will look at the supporting indicators to see whether the same thing, right? Okay, now I got a T3 buy. But I see that already I am somewhere at the top. So I should not buy it here. I got a T3 buy and I see the score is minus 68. That means nearly minus 70. So that is a good opportunity. Then it went all the way up to the top. But if you do a buy here, right, you are taking a risk. You are buying somewhere where already 70 people bought it or 80 people bought it. You are buying now. After 80 people, you are buying, suddenly it can start dropping. So with T3, sometimes it can be positive, it can be an advantage. So if you miss this opportunity, you may get another T3 buy here, another T3 buy here. So we have another indicator called T33. So similar, yeah, there is no difference between T3 and T33. Only thing is instead of, so here you will have just one signal, right? Just you got one sell, one buy. After buy, you will get one sell and then you will get one buy. But you will not have, right? For example, you got one cell here. Suddenly it goes and touch this line. There might be another T3 cell. With T33, there will be only one cell. And if you see this cell is above 78, 70, this is red, a perfect opportunity to short. So that's it. All we need to do is wait for this conference, whether you use T33 or you use T3, use price pulse, use top trend, they are our primary indicators. Along with them, use T5, T55, and if your score is above 70, good for a good for a sell opportunity, good for puts, good for bear calls. If it is below minus 70, good for a long opportunity. So if we can just follow this strategy, you will be successful 90%, right? You are not buying somewhere in between where it is 30, 40, 50, right? They can be choppy. Sometimes it can go up, it can come down. But all you are trying to do is close to minus 70 or above 70. Above 70, short opportunity. Below minus 70, long opportunity. That's it. So I hope it is clear for everyone where you are making mistake or so. So let me hide these lines so you will understand. So here you can see T33, it will show a blue color. That means it is bullish. Again, it will show a maroon color, which is like a bearish. So whenever this turns to bullish, blue color, then immediately you go and see, okay, this is also right from the bottom, it is moving up. So from the bearish trend, it is turning to bullish. Okay, this I got my confidence one. Then I go here. I see that our score is minus 68, which is very close to minus 70. Right? If it is minus 70 or close or around that area, that is a good opportunity to go long. You would have gone long until your buy is there, you can hold the whenever you get a T3 sell, you close the trade. You would have made $1,000, $2,000 in this trade, right? So again, right, you always trade when there is a proper volume. When volume is very, very less, right, in the evening time, you use the same logic, but instead of 5 minutes, you can go to 2 minutes, 1 minute like that. Go to smaller time frame, right? You don't use 5 minutes in the evening time because there will be very, very low volume. So for example, here you see T3 sell, T3 buy, there is not much volume. So if I go to 1 minute now, okay, Friday we have after 5 market will be closed. So we'll go to 1 day before or morning 6 to 7:30 where volume will be generally less. So you got a T3 buy score is minus 88.5 and little bit more. So easily you can make $200. You got a sell, but score is minus 62. So better you avoid the sell signal. Don't take it, right? So again, if you go a little further, you got a T33 sell. Score is around 73. That means it is overbought. So you got a orange candle, right? It is at the top. So from top it will come down or from the bottom it will go up. You got 73 and you got sell, then a perfect short opportunity. So we are all about watching that conference, right? In the US hours, use 5 minutes. In the non-US hours, use 1 minute or 2 minutes maximum, or max 3 minutes, not more than 3 minutes. In the non-US means in the evening time, in the early morning time, you can trade futures nearly 23 hours a day from Sunday evening to Friday evening. So That is right. You can trade stocks, you can trade futures, whichever you want, right? The concept is same, right? For example, mRNA. Okay, now you got a sell, you got orange candle. Immediately go and see, okay, what is the closest score? 89. Okay, that is very good. Above 70, good for a short. It went all the way down from $37, it went to $38, it went to $36. If you buy the puts, it will make huge money. Within 1 hour, you will make 100% on that. So again, you got a T3 sell here, but you see the score minus 92. Then you should not take this trade, right? Don't think that, oh, because it is sell, here it is blue, here also it is minus 90. You should avoid this because the trend is looking bullish here. So now you got a buy here, right? So again, it is a good opportunity. It went all the way up nearly $1 or nearly 50, 60 cents. So whenever you have a confluence, right, there might be sometimes where you may miss, right? Here it is 6, right? It is not 70 or it is not minus 70, it is 6. Sometimes it may go up, sometimes it may come down. Here, that would have made money, but it's okay to lose some opportunities, right? Because you got a buy, score is somewhere around 6. From bottom, it is at the bottom, it started moving up. So this would also would have made money, but your low risk is when you are buying close to the bottom, close to the top. Somewhere in middle, it can come down or it can go up. We never know. It can go any side. So we'll ignore those trades. So every software has its own logic, right? Every software is using some different filters, different criteria to give a buy and sell. So you can use whichever you want, right? Again, you don't want to depend on one indicator. So the you use the combination. If T5 is telling buy, if T55 is telling buy, right? Whenever you want to take a decision, you will ask 4 or 5 friends. You will not just go with one friend advice and buy a car or buy a house or join your kids in a school or college. You will check with 3, 4 friends and then you take a decision. If 3, 4 are telling that that college is good, then you may join your kid in that college, or you may buy a house in some community, or you may rent an apartment somewhere. Based on in the same way, these each indicator is like your friend, right? If 4 indicators are telling same thing, then you have much more chance of success, right? Because each software is using a different set of instructions, different set of logic, different set of filter criteria, and they are telling you what to do. If you follow that, you will be successful. So yeah, again, in the pre-market you can use this, or right, you got a, for example, this one. So there will be plenty of examples every day. There will be hundreds of opportunities. All we need to do is wait for a proper. So here you got a T3 buy. Here it is minus 82. Right? From here it went all the way to the top. From $23, it went to nearly 23.6 or 23.7. Within few minutes, your calls, you can buy stock, your calls would have made some nice gains. So here it is only minus 0.71. You got a sell. You can ignore it. Right? You want it above 70, or you want it below 70 or close to below 70 to take it trade. So if you follow that, you will be successful. Uh, so that's what. If it is somewhere in between, that means it is very, very choppy, right? And also we have table like, right? For example, if you use price pulse, there is something called as strength of the. So if your trend strength is completely red, that means it is very, very choppy. But if it is completely green, that means there is a proper strength, proper volume in the direction. So if you want to take a trade, you also look at, okay, is my strength green? If it is green, that means it is not choppy. It is not just moving in a sideways market. If it is just moving choppy, very up and down, then all these will be looking in the red color. Then you better avoid, don't take the trade, even though your criteria might match. But if your trend strength is looking red, if you are trading in 5 minutes, you look, okay, is my trend looking right? Is it choppy, or is it moving in a uptrend or downtrend? This will tell you, right? Because at end of the day, in the 5 minutes, it is just moving a sideways market, so on a Friday you can see that it is just going down, going up, going down, going up, going up, going down. So it is just moving in a sideways in the 5 minutes. So the trend strength is 11. So that means you should not do a buy or sell at any at that point of time if the trend strength is very, very low. So like that, you can use price pulse or top trend or T3 or T33 along with T55, T5, and you can buy the stocks, you can buy the options, you can do commodities, you can do futures, you can do in your personal accounts, you can do in prop firms. All you need to do is remember that simple rule is my whenever you want to buy, your score should be below minus 70. Whenever you want to sell, your score should be above 70, along with the confidence. Right? If you follow that, you'll be very, very successful. Right? So now for earnings, you basically look in the daily time frame. Same concept, but you look in the daily time frame instead of 5 minutes time frame for earnings, and then the same strategy. If it is below 70, if it is looking bullish, then it will go up. If it is above 70, if it is looking bearish, it will go all the way down. So yeah, just a minute, everyone. Yeah, that's it, everyone. So right, that is about our top four indicators. Again, we have lot of scanners, lot of other things which will be very helpful. Right, for example, we have something like, so in addition to those indicators, so these are like our third type of, right? First one is your primary indicators. These are the secondary indicators. These are the third type of indicators where, for example, here it is telling that, okay, now GF is bullish, natural gas is bullish, NKD is bullish, YM is bullish. So you can focus only on the buy signals on these ones, right? That means there is a high possibility for them to go up. These are bearish. Ultra bonds is bearish. Copper is bearish. So on the Friday we took copper sell signals, we made huge profits, right? We took 9, 10 contracts, we made $2, $3,000 within few minutes. So this indicator will tell you which are most bullish, most bearish. You can use them while trading. The same way stocks, it will tell you like, oh, crowd is very bullish, avgo is very bullish, so we got calls for avgo, we got bull puts for avgo, right? Tesla is right, the snow is bullish, like that. Mainly you can focus on the top ones for your trading. Yeah, right. Generally, if bottom ones will be bearish, you can focus on them for puts. If you see bullish in the top, you can focus on those tickers because there are thousands of stocks. You don't know which one to look at. But if you see these ones, they will tell you which ones to focus, which are the best ones where you can make. Right? AVGO was very bullish on the day. From $180, it went to $195, $197, like that. So, yeah. So that is about the indicators, right? Our main indicators. Let me stop recording here.